Okay, today we're going to look at what's going on with the Central Texas real estate market. A couple of myths, things that people believe that simply are not true. We're going to take a look at the luxury market and a surprising piece of data there. And then we'll tie up with the rental market to figure out whether you should hold or sell right now. You're thinking about selling, you're thinking about buying, you're a regular person who just wants to try to figure out the timing of the market. We'll take a look at it all. So let's jump in. Central Texas real estate market update. Let's go. Okay, so the most interesting pieces of data here, which, by the way, we're getting from the Austin Board of Realtors, is on four categories we're going to look at today. We're going to look at sales and pricing, buyer demand, inventory, and price drops. Right? These are the key indicators as far as what's going on with the market. And let's just jump right into monthly sales and pricing data to get an idea on what's going on here. And as always, you can see the biggest chunk of sales happening in the $300,000 to $400,000 range. And then right behind that, the $200,000 to $300,000, and then $400,000 to $500,000 range, and then of course the luxury range starts to trickle down. Now there's some pretty interesting days on market data for the luxury that I'm going to get to in a minute, so stay tuned for that because some really surprising data on the luxury market. All right, so number of sales 3,187. That was for the month of April. Median sales price $422,000. Now the median number is always what we want to look at because you can see here the average is $566,000. That's a big discrepancy, right? Over $100,000 of the number's $100,000 difference. So median is where the middle is. Average, just add them all up and divide. Median is like, okay, where's the middle? If we laid out all the sales on a linear line, where would be the middle? And that gives us more of an indication in regards of accuracy for sales price, final sales price, for days on market, which I'm going to get to in a second because there's a big myth going on around the market on the market's not good or a bad market. So I'm going to look at some of that data in a second here. Okay, because you see here, median days on market, 36 days on market. Bang, there's myth number one, is that people say the market's slow. People say that the market's not good. And the matter of the fact is that while the inventory is high, I'm going to get to that slide in a second here, there are a lot of homes on the market. It's not a slow market for properties that are priced to sell. Now, I know you might not like the reality of some of this pricing, Mr. and Mrs. Homeowner, but the matter of the fact is that prices that are selling are in fact selling within a fairly reasonable period of time, 36 days, which is not what most agents are telling you because they're afraid to tell you the price. The number one reason homes don't sell is the agent. Either the agents don't want to tell you the truth because they don't have that much business, so they're afraid to tell you what reality is, or they just don't understand the data. They literally don't understand the data. They don't know how to look at reports and do pricing sheets, right, to be able to pull comparative market analysis, right? Take a look at properties that are currently active, pending, and recently sold, and come to a reasonable conclusion by computing the data and figuring out, okay, what's really going on here. And I love that information. I love talking about that. I love studying that. I love presenting that and sharing that because there's such a scarcity of professionals out there who are either A, willing to share it with you because they don't have that much business and they're scared to lose business. And so they'll agree with whatever you think. And I know that your home's special and it's nice. And certainly that there's a lot of data out there with Zillow and Realtor.com and on and on and on in regards to algorithms and computers that are never going to walk through your front door and understand why your home's worth more or potentially less. And so that's the difference with a seasoned professional who can understand pricing and bring data like median days on market, 36 days. And we'll take a look at that here in a second for the luxury range, because one other thing I want to look at before we go deeper on days on market and talk about that luxury data is where's the market going? Okay, where's the market going? And so we can see this green line up here is 2024. Okay, the green line is 2024. The orange line is 2025. Okay, and then the black line 2026. So we can see pretty clearly here that 2024 is higher than 2025, and we see it finishing 435. Started the year at 420, finished at 435, and we see all 3 years. Well, we don't know for April yet, but I'll tell you, April, May is typically peak appreciation time. What's the peak value time for the year, and then we see in March, in 2024, it trickled down, hit bottom in September, bounced upwards a little bit, and then finished a little higher towards the end of the year. 2025, same thing, 435, and then trickled down to 408, and then bumped up, and then finished at 420. So 435, that was the median finishing sales price for the whole market. Now, look, I know this is macro data, and there's a lot of micro data that is a little bit different based off of where you live and area, but as a whole, this gives us a bigger picture as far as what's going on as a whole in the Central Texas market. So 435 we finished at 2024. 420 we finished at 2025. Now 2026 we can see it already trending lower than 2025 and 2024, and so reasonably we can deduct, and this is pretty systematic outside of the scope of like unforeseen things like the pandemic, where in 2020, 2021, and 2022, the seasonality was all kind of jumbled up in regards to appreciation and properties raising value in the springtime and then beginning to lose value. Because look what's interesting here is that it begins to trickle down in value May, June, July, August. Value slips those months. There's another piece of data we're going to talk about on inventory here where we'll come back to this, where people don't know that actually value begins to slip a little bit beginning in mid-April, actually. Okay, and we're in May now, so values tend to slip and hit a bottom in September. And if we were to go back and look at data in past years outside of pandemic, then we'll see a trend that will mimic this. So when people say, well, let me wait and see what happens with the market, I want to see if we can get a little bit more value here. Look, likely not to happen. Okay, likely we're going to see what we have seen in prior years, and oh, by the way, 2024 and 2025 are not that 2026 is not that different from 2024 and 2025, and so there's nothing extenuating outside of, well, we'll see what happens with the Fed here and interest rates. That'll be interesting. I think there'll be some effect and there'll be some good news there, but nothing dramatic that will make this graph look significantly different. So if you're looking for more value by the end of the year, we could see here 447 was the peak in 24, finished at 435. 435 was the peak in 2025, finished at 420. 423 is the peak in 26. Are we going to end below 420? Probably would be my guess if I was going to lay a bet, and I lived in Las Vegas for 18 years, but I don't like gambling, and so with that, I'd say, look, either sell faster now if you're a seller. Look, the question is should I sell now? The answer is yes. If you're waiting for 6 months, look, 6 months from now, values are going to likely be down. When will it recover? Well, we see here values begin to recover typically starting in February, March, April. Those months we can see on the graph here, February, March, April, values start to increase. Making that's kind of annoying there. Okay, we can see here February, March, April values beginning to increase, and so waiting until next year for prices that have already slipped this year is not going to be significantly that much of a difference. We can see here we finished the year 420 in 2025, but that's down from 435 at the peak in April. Same thing for 2024. 435 we finished. That was down from the peak at 447 in April and 24. Now you can see right here, the peak obviously was 2022. Everybody knows that. And then down 440, 430, 422, 414 right now. And again, based off of the graph, like we're already trending beneath the prior 2 years. So what's going to happen this year on value? Probably going to come in under. So if you're waiting 6 months, if you're waiting a year, you're probably waiting to lose money, because even if we finish at where we were at the peak this year, what did holding costs cost you? What are other factors that determine how this is actually going to cost you money versus go ahead and selling right now? Because here's what I'm telling a lot of my investors, especially who are trying to figure this out, is that if you're going to wait, look, you're looking for at least a 2-year hold, likely more of a 3-year hold to start seeing significant returns. We don't know what's going to happen in 2027, and I don't have a crystal ball. If you have one, email me. I'd like to talk about that. But the matter of the fact is that the market's just simply not in a place where in 6 months it'll be that much better. That in a year it will be that much better. The numbers and the data just simply don't demonstrate that. Okay, so buyer demand. Let's look at buyer demand. Now, right now, we can see the activity for, let's see here, days on market. Okay, this is pretty interesting right here. Buyer demand for luxury homes, 1.4 million and above. Look at this, days on market, 29 days on market, 1.2 to 1.39, 15 days on market, 1.1 million to 1.19, 36 days on market. So if you're a luxury homeowner and you're talking to an agent and they say something along the lines of, it could take a while to sell your home, then they don't know what they're doing. They don't understand pricing. They are not informed with the market. They are not connected to the right circles to help get you what you want in the time frame that you want it, because the matter of the fact is $1 million properties are selling even faster than properties that are in the mid-range. $200,000 to $500,000 is where the bulk of sales happen. But the matter of the fact is while the market is fat in inventory, there are a lot of homes on the market. Look at this. I'm going to jump ahead here. 16,173 homes on the market today. Today's May 18th. And so that's a 5-month supply, meaning if no other homes came on the market from today moving forward, no homes came up for sale, new homes came up for sale. How long would it take to sell all the inventory? 5 months, a little over 5 months. Okay, so the market, that's a lot. It's not tragic or traumatic, but it is a lot, especially from what we've seen prior and what even some Northeast and Midwestern states are seeing right now. Just a couple of homes, a couple of months of inventory. Those markets are much, much more different, adhering to the old saying that real estate's local. And by the way, our market here in Central Texas, the greater Austin, Texas area is different than San Antonio. It is different than Houston. It is different than Dallas. So we have to look at what's happening in our micro bubble here in Central Texas and the greater Austin area to really understand what's happening, because in other parts of the state and the country, it is different. Okay, so back to buyer demand on this myth number 2. Myth number 1 was it takes a long time to sell property. Myth number 2 is that luxury homeowners thinks that it'll take forever to sell their home, and we can see 24 days on market for 1 to 1.9, 15 days 1.2 to 1.4, 36 days for the 29 days, even less than the look at this. 36 was for all of them. 1.4 and above, 29. It actually properties 1.4 or above sell faster. Now, what's the key? The key's pricing, because 1.4 and above, typically everything's nice. Views and luxury and beautiful, gorgeous properties. And so what matters is your pricing and ultimately your marketing strategy. But numero uno, it's always about price, baby. Okay, it's always about making sure that you have the right price, because how often do you shop for overpriced items? Think about it. I mean, buyers are only looking, and I'll give you a little tip here for Mr. and Mrs. Seller, okay, or anyone who's thinking about selling their property, is that people don't shop for overpriced items. They don't even show up to look. Did you? When you were looking at properties, did you just willingly and excitingly go look at properties that you knew were 7 to 10% or more overpriced? Typically you didn't, and typically they don't. So they're not going to show up until they think you're in the strike zone. They think that your property is priced close to what they'd pay for it, or else they just don't come up. They just don't come see your property, and that's something agents are not talking about to sellers. They don't have the guts to look you in the eye and say, "Look, they're not going to show up." Now, for us, it's a matter of understanding where if we want to try and start high, then we have to have some understanding on time frame to allow that to happen, to test that out, because the longer we're on the market, the worse off you are. Properties that sell sooner sell for more. So I know that you may not have a time frame, and you tell me, but Paul, I don't have to sell, and I only need that one buyer. Well, National Association of Realtors tells us that it takes 10 showings to get a couple of interested parties. So while we only need that one, we need groups of buyers coming through, even at $1 million properties, to get to the one. And the only thing that makes that happen is price. And so we got to get the price right to make sure that the one thing that affects everything is price. And agents who are willing to tell you that, agents who understand how to tell you that, are at a scarcity. We love having those conversations. By the way, click the link below if you want to schedule a conversation to talk with me about your property. No obligations, no pressure. Bringing information is always my first job. I've sold hundreds of homes since 2008 across multiple states here in the real estate industry. And so I always love having conversations, even if it's not for right now. Conversations is always my first job. So click that link in the description. I'd love to have a conversation with you privately about what's going on with your home property value. Okay, so let's keep going with buyer demand. And we can see here that we went over the important data, 36 days on market. We talked about that. Here's another interesting stat on buyer demand. Original list to close price. So the original list to close price is 94%, meaning they started at a certain price, and on average, I hate that word, the average was 94%. So homeowners gave up 6% on average of their asking price. Just so you know, the Vision Realty Group, we're at 98+% of our ask to list sell price. So right off the bat, I'm going to save you 4%, okay? Because the average people typically don't get it right. They don't get their price right, and then they end up having to reduce, and then buyers start dragging sellers down. Now, for buyers, this is a great opportunity, because if you have an agent who can do the homework to figure out what's going on with the sellers, and someone who's a buyer's agent who could talk to the seller's agent, you start getting some intel on what might be happening with a scenario that may be more susceptible to you to pull the seller down. Now, that's a good buyer's agent picking on weak listing agents. Okay, so there's some value for you there, buyers, to make sure that you get a great deal. And there's tons of that out there, because there's tons of listing agents who really don't understand what they're doing. And how do I know this? Well, we're seeing 25% of the market expire or withdraw every month, meaning they didn't get the price right. Buyers don't like the price. They sit on the market a long period of time. Either the contract expires, they were under contract to sell for 3 months or 6 months or whatever, and the property fails to sell. Or the seller's been on the market a certain period of time. They realize that buyers aren't biting, they're not getting showings, and they pull the listing, they withdraw it, and they pull the property from the market. And so expired withdrawn listings tend to run around 25% of the market every single month. 25% of the market just gives up, and sellers say, they tap out and they're gone, right? Because another interesting piece of data is that only around 12 to 15% of homes sell every month. So 85% of homes are failing to sell every month. What's the problem? The problem's insight and information, i.e. price, to understand what will cause a home to sell. Now, if you don't like the price of what's really going on with the market, let me give you a really good piece of advice. Don't list your home. Wait. Now, if you can't wait, and you're one of those people that are waiting to see what happens in the next 6 months or 12 months, then don't wait, and get real and get right to what will cause your property to sell, because in all likelihood, you could lose more money, or at best be even, and costs still pull you down on how much money you spent over the last several months. And so get real quicker when you're looking to sell your home right now, if you're just trying to test out the market because you want to wait and see what happens. Wait and see what happens means you're going to lose some money. Likely. Okay, so we looked at buyer demand. We looked at a little bit of inventory, and now our price drops. I think this was an interesting piece of data on price drops. Category number 4, price drops. The average percent drop from people who had their price Wrong to start with. The average price drop was 7%. So a $300,000 home needs to drop down closer to 300,000. Okay, a $320,000 home that's listed for sale, $325,000. Look, a $5,000 price reduction is not going to do it. If you want to see some movement on your property, just moving it a little bit is not going to change the needle. Just because it repopulates on people's lists or they see it as a price change on Zillow doesn't mean they're going to get excited. For you to be able to move the needle and get someone to make the offer, you're seeing right here, average price drop 7%. So somebody listed at 320 or 325 is going to have to get to 300,000 or real close to it to see buyers get excited and know that they're willing to make an offer. Now this is actually a really bad piece of data here. Days until price drop 61. Well, we already saw that the median days on market is 36 days. Average price drop, days until price drop 61. We got a problem here. Listing agents don't know what they're doing. If a listing agent allows you to go a significantly long period of time, what is that? Well, past 30 days. I mean, people are waiting 61 days to make to drop their price. That's a problem. Well, I just need that one buyer. Well, look, the longer you're on the market, the more buyers think, what's wrong with the property? Are the sellers not motivated? But more importantly, so it's what's wrong with the property. It happens time and time and time again. And how do we know this? Well, properties that take longer to sell for less. It's statistics. It's in the data. And so you don't want to be on the market a long period of time. The market is your enemy. You need to sell faster. Selling faster means selling for more. Now, look at this here. This is a very interesting piece of data here. Last month, listings that dropped their price and went under contract after a median of 14 days in this market. So when they finally dropped their price and got to the strike zone where buyers like the price, it only took a couple weeks to sell. Okay, so what does that mean? Price is everything. Okay, price is everything. Price is number one, price is number two, price is number three. Now, the marketing pushes that price so buyers can see it and like it and come see the property, and we get lots of buyers to show up, which again is what we need. We need 10 showings to get a couple of interested parties, according to National Association of Realtors, right? So we may only need that one buyer, but we need groups of these buyers to show up to be able to get to that one. And this feeds directly more into that myth where the market's slow. The thing is that there's so many people that are priced wrong and they're complaining and they're moaning about it that a lot of people think that the market is not good. Now, it is not good based off of this data that we saw here where properties are, we're trending down here on value. So that's not good. And the advantage is that if you understand price, then you can sell sooner for more, whether it's seasonality, which we're looking at here, or it's actual days on market where you don't want to be on the market a longer period of time because buyers just pay less. I've seen this time and time again, by the way, on expired withdrawals, because I deal a lot with this. I help about 25% of my business is properties that fail to sell. And what I see is that property will come off the market. I look at the price. Price actually is pretty good. It's fairly in the strike zone on some occasions. And then what happens is we relist the property close to where it was before, and then bang, it sells. Well, why did it sell before? Well, because buyers are looking at bruised bananas. They see the property and its price, and then they see days on market, 6 months, and they go, whew, what's wrong with that property? Or there might be, I'm not interested in that property. There's just no interest because those days on market kill perception, and perception is reality. And so the longer you're on the market, the bigger of a problem it is. Time is the enemy. I love having those conversations, by the way, because so few professionals are. Okay, let's jump into the monthly activity and pricing for the rental market because I think there's some interesting data here. I'm just going to finish this up really quickly and then get to whether you should buy or sell right now. I know I addressed that a little bit for sellers, but I'll give you one more nugget at the end here. And so you can see, again, properties that are moving in the rental market are in the 1,500 to $2,000 range and $2,000 to $2,500. So pretty even there. I mean, literally almost exactly even. So $1,500 to $2,500. There were almost 2,900 leases last year. That's up 7.3%. The median lease was $2,100 per month. Median lease $2,100. That's $1.50 a square foot. Median days on market 29. So again, not an extended period of time for the rental market either. So if you've been on the market more than a month, you got a problem. Okay, and if your listing agent, your leasing agent isn't talking to you about that, isn't providing data to you around that on a weekly basis, something's wrong. Okay, and property managers are just as bad as agents as far as information, experience, and the transfer of and a consultation to really help you understand where you're at to get what you need in the time frame that you need it, because you should not be on the market a long period of time. I think this is an interesting graph, and then I'll tie up here is that the market pricing for 4 bedrooms hanging around 2,400. Let me see here. Okay, hanging around 2,400. Okay, and that's the orange. The orange is 2,400 for 4 bedrooms. That's the median. For 2 bedrooms, 1,700. For 3 bedrooms, 2,000. Now, what's interesting here is the hold on a second here. I'll help you out. What's interesting here is we go back to June 2024, May 2024. 2,500 for 4 bedrooms. Let's see what's going on here. 2,400 for 4 bedrooms. So 2,500 for 4 bedrooms back in 24. 2,500, 2,400 in 2026. So you can see the line here is relatively even. It's nudged downwards in regards to what's been going on with the market. But the market hasn't been crashing in the rental market, but it has been nudging downwards over the last 2 years. Okay, it has been nudging downwards. Okay, so the real question is, should I buy? Should I sell right now? Look, the market is an interesting place, and there are some global and economic and national, in the United States here, factors that are concerning. And nobody does have a crystal ball. And so I'd say that if you're a buyer, man, people will probably look back in time and go, man, 24, 25, 26, maybe even 27 were great years to buy. Real estate typically runs in 5 to 7 year cycles. And look, we peaked in 22. So 23, 24, 25, 26, that's 4 years. 27 will probably be a little bit more of the same. But the interest rates could help and things get a little bit better. But look, we got issues nationally. We got issues internationally. There's issues with the economy. And so I'd say that we're probably in that cycle where things aren't going to get much better. And so if you're a buyer, the last couple of years, this year, look, properties are at a discount. We saw properties that we'll get back to that. We saw how we're trending downwards the last 3 years, and this 4th year looks the same. And so it's a great time to buy, especially for new homes. Now, in the greater Austin, Texas area, most of the new homes are on the peripheral of the city limits and beyond, in these bedroom communities out in Pflugerville and Hutto and Georgetown. And, those are a lot further out. But if you're in those areas, there's fantastic new home deals. Look, reach out to us. There are amazing deals out there where these new home builders have their own lending institutions, and so their interest rates are a point to 2 points below what the regular institutional lending's doing. They'll pay closing costs, and they'll take off the price. I mean, new home builders are bending over backwards right now. And if you're working with the right agent, a professional buyer's agent can go do some homework on which properties are more susceptible to making more concessions and to negotiating price for you to be able to get a great deal. The interest rates aren't amazing like they were before, but look, they're never going to be 2 or 3% probably in our lifetime again, or maybe ever. Okay, so the reality is, 5 to 6% is not bad in the grand scheme of time for interest rates. And so I think we're seeing that too, people understanding that that's more of the norm and coming to terms with that and realizing that and accepting that. Now, I know I said this to you sellers before, but look, sell sooner, faster. You guys got to get on board with selling your property sooner, because trying to start high may be something that you compromise with the listing agent compromises with the homeowner, but a professional listing agent is going to make sure you know what you need to know, which is, look, don't sit on the market for a longer period of time, because this is going to hurt you and this is going to cost you. And so let's have a candid conversation on what's going on with that. And if you're waiting for 6 months to a year, look, don't bother. It's not going to be much better. And the people now, you saw the graph with 24 trending below 25 and with 26 trending below 24 and 25. People now are kicking themselves they had sold in 25 and 24, and especially in 23 and 22. So stop waiting. People who time the market lose money. Even the professionals can't do that. Okay. So this is a very interesting market. Hit us up for comments or questions or concerns. I love having conversations with people about what's going on with the market. And every neighborhood's different, and every area is different, and every home's different. And so getting some clarity on your options for you to make an informed decision on what's best for you to get a result that you can expect is exactly what we do. Stay tuned, subscribe, like, share, and these videos are coming out every single month to make sure that you guys know what's going on with the real estate market in the greater Austin, Texas area. Your vision is my mission. Stay tuned.